Wednesday, January 29th, market analysis, Stan Ehrlich. Good morning, 9:48 California time. I start with stock market indexes, usually the mini, and go to futures markets. And we got some very interesting stuff to discuss here. Remember, the market did top out so far for most indexes in early December. Overbought conditions, spent a week going sideways, and then all of a sudden had a big break December 18th. But it did get oversold on that very sharp, large crash and ended up producing a buy signal, which caused a little rally. That's great. But we bounced back up, but not making new highs for the trend at all. In fact, stopping around the lows of that little sideways 2-week trading range at almost the same price as a previous high back in November or minor resistance. Turned around, came down, almost met a new low, didn't make a new high in the rally, and then did make a new low. And that was just the 13th of this month. But again, it got oversold in a support area and bounced pretty good. Now, this time, it came all the way back up very close to making new highs for the whole trend, which again, were essentially on December 6th, the top high day. But it was around a 2-week trading range. And all of a sudden, on Monday this week, after being overbought for 3 days and at resistance close to previous highs, we dropped like a rock, but it closed in the middle of the range, only half the way down, not near its lows or anything. And it managed to rally back up again yesterday somewhat. And in some cases, we have now this morning or yesterday been able to get a little bit above the high of Monday. That's modestly important because it closes or tries to close a previous down gap from last Friday's low to the high of Monday. That gap could have been and still may be a breakaway gap to the downside. I'm not quite sure yet, but that's if we are going lower from here, and I think there's a good chance of that. It's going to go down as a breakaway gap from a double top. All right. I am obviously liking what I'm seeing. We're down about 2.3 on the day, SPY wise. Just drop, change the decimal point to the left one, and you got the same thing. That change of its parent symbol, SPY. So it's not a lot near the lows. That's good. Let's go look. And by the way, if we do end up breaking below, and I think there's a decent chance of that, 5806, give or take a little, that's going to pull the trigger on the double top formation, assuming we don't make any new highs in the meantime. And we go down to the next, I don't know, what do you think, a week or two in order to get down to that 5808 area. Now, if that's broken on a closing basis, then the downside objective is 5446. Pretty good. Back to the August, September price ranges. Okay. I'm not yet that bearish, but there's a chance. Next. Come on. Here we go. So we're heading toward the low of the day. And this is a 1-minute ES chart continuation. So there's no real damage done if we get below yesterday's lows. I got to point that out to you. We will have an outside down day. Today's high is higher than yesterday and Monday, closing a little bit of the gap between Friday of last week and Monday of this week. And if that is a bearish engulfing today, and we're not that close at all at the moment, you got to get down to 23. We're last at 70, got 5 full points lower yet. So that would be down around 7-ish for the spider or 70 for the mini in order to have that bearish engulfing. That will produce a red bearish ER sell signal because we were overbought only a few days ago. I don't have to be overbought. I'd love it if we had the bearish engulfing on the same day, which happens often. All right, next. Getting close to making new lows for the morning session, or actually for the whole session yesterday, including last night, etc. All right, so the the spider, which has vastly different trading hours, remember, only 6:30 in the morning California time until 1 o'clock in the afternoon, rallied up and closed a tremendous amount of its gap, which was huge because market sank a lot, of course, Sunday afternoon, Sunday evening, and very, very early on Monday morning. Therefore, of course, the spider E-mini had price range, much higher. So anyway, the gap is closed. And yesterday's high was one tick above the low of the gap area. You have to believe it. The low was 605.36 on January 22nd. Yesterday, the high was 105.37, one tick higher. Close the gap almost exactly. It can't get much closer. And then slipped a little. That's not really a resistance area. It's simply the area of the gap, which I am now going to erase because it's closed. So now what? Well, as I said, I think we're starting to slide, and I'm looking for lower levels pretty quickly. Maybe a reversal today. And there's the 1 minute spider momentarily. So here is the QQQ. Now, yesterday, the QQQ, which has a shorter trading time frame, 6:30 in the morning, 1 o'clock California time, did not close its gap. I still have a marker there. I probably should drop the top of it down just a little bit because, yeah, that's the right thing to do. I had it a little too high. But we didn't get up to it, didn't even bump it, didn't close any of it. And I don't know if we're going to leave that behind. We could. That's the breakaway gap then. And what some people might call a 3-day island. In your textbooks, I don't think you're ever going to find any reference to a 3-day island top. Mostly they're only one bar or one day, gaps up and then gaps down the next day. And they're very bearish very quickly. And there are island bottoms also, which are very bullish very quickly, usually. So I think we're slipping, and not quite as fast as the futures contracts, lower on the day at the moment at 82.5 or so lower. We got higher than yesterday's high, so we could have a bearish engulfing. But look at this. We did have a bearish engulfing on January 24th, Friday of last week. The only reason it didn't turn red is because it didn't quite get overbought. Got to have both for this code to change colors of the bars and give me a signal like that high day right there. Like that signal, which didn't work period. Like that green one, which did extremely well. Like this red one, which actually did okay after a couple of days of waiting. Green, great. Red, you can't get better than that top, that top, that top. Okay, enough. So it could have a bearish engulfing, and I'd like that because it's a bearish signal all by itself, but it won't turn red. Next. Oh gosh, I forgot. There is the good chance that this is a head and shoulder top formation. I have my little markings at the first shoulder high, the head of the formation, and the other last shoulder high. The timing for these shoulders is very adequate, very nice. The fact that it got overbought on the first shoulder and the head of the formation is also very typical, normal, expected, basically. We got a sell signal in the first shoulder, unfortunately not on the high. The last shoulder did have a bearish engulfing, and it did come close to getting overbought, which, by the way, is also relatively normal because there isn't usually that much of a rally into the last shoulder high. Okay. If we come down to this neckline, which is just barely upward slanted, we will have a downside objective of 18,950. And that's, of course, only if we start dropping off fairly quickly here in the next several days, a week or two, and break the line, the neckline, without any rally in a new high ground above the shoulder high we have established so far. I think this is a head and shoulder top. I'm sorry. This is a little breakaway gap on Monday of this week. And the NQ next chart, getting close to the low of the session. We'll come back at the end of this to see what the E-mini has done in the meantime while I'm yakking away here. So the YM is a little different. It did not get above yesterday's high. If that had happened, then we'd have a good chance of an outside down day. It's down a little on the day, but it's a doji so far. But it has been overbought for 1, 2, 3, 4, 5, 6, 7 days. It is around a little above a previous bull trend line, the bottom of an upward slanting channel. We did not make a new high for the whole trend. I'm not sure I could get away with calling this a double top, but if that were a little higher, say, I don't know, somewhere up in here, but right around or closer to the previous high back in late November. Yep. then I'd love it for a double top. But no, it's just kind of borderline. I'm looking for it to start to head south. What does it look like on a 1 minute chart? Here we are getting close to the low of the day. Okay, Russell, resistance in a major resistance area and a minor resistance area inside the larger one stopped the rally last week. 4 out of 5 days bump up, basically bumping up against that minor resistance zone, and now stalling for a couple of days as we are starting to slip in general. I want to see lower lows being made for a week plus soon. And I think it's going to come down at a very bare minimum into the red zone again, maybe down to 2175-ish again. And I don't rule out something lower than that. It kind of depends on whether the other patterns have the downside breakouts I think are possible, but a little bit of a stretch for the moment. Okay, next. The Russell 1 minute chart getting close to the lows. If we start getting down here underneath the lows of the last few days, I could start to fall faster. Okay, bonds almost made a new high, still holding above the neckline. Broke the neckline on this head and shoulder bottom on Monday, tested the neckline yesterday, closed okay, down just slightly. Today, at the moment, we're essentially unchanged, up a tick or two. I think it's going to start to rally ASAP. I do not want it to close below this yellow line, the neckline. This is the shoulder low. We got a buy signal around the shoulder low. We got a buy signal, ladies and gentlemen, on the exact bottom day in the bond market. And because of my code, we bought automatically the opening the next morning on January 15th at 11:30. That's not the time. That's 1:11:30, the level for the bonds to be trading at, which happened to also be the low tick of the day. And we're still long from that price and that date, the low of the day on the opening, November 15th. Doing okay, pretty good. Minimum upside objective 117.5-ish. And that's a minimum again. Technical patterns typically produce minimum objectives and oftentimes go a lot farther than the expected minimum if the pattern works correctly, of course. So far, so good. Looking for higher levels ASAP. Notes are toying with the breakout of the neckline. I'm kind of a little bit concerned here. I don't like the fact that it pops its head up above, stays at, then dips down again, then tries it again, and it's not at this point above the neckline. I got a little problem with this. I certainly don't expect it to drop off a lot. Let's say 8 below yesterday's low, for example, and absolutely not back down to 108.07, 807. So that would start to create a lopsided pattern, which right now is very symmetrical. The low and price for the shoulders are almost the same prices. Great, typical. Neckline is almost flat, downward slanted very slightly. Great, typical. The pattern itself is a month or so in duration, and that is not unusual. Very normal. I'd give it a small to medium small size. I've seen them be multiple years, but that's very rare. Okay, just start to close above the neckline and make new highs soon. That's what I'm looking for. Dropping down below the support line in crude oil. Now we're going to go heat, crude, unleaded, and then gold, silver, platinum, copper, and then grains and meats. So this is a new low close probably in crude, still coming down, not oversold yet. Now it's back into the old pennant formation we had, which did break out in a very classic manner. It did go up really nicely, made new highs for several months, most of the year, and top out in overbought conditions close to the resistance level. And now it's come down to the support line. But today, the first time, it seemed to be wanting to close below the line. So I'm looking for a little bit more of a dip, which probably will cause an oversold condition. And somewhere, best guess is 70, 90 down to 66, 67 flat, and then turn up. Next, heating oil. A little bit lower, not oversold yet. Probably going to dip down to 2.31-ish and maybe a little lower, but I do expect it to hold around the support area, maybe a slight bit under, but this is a pretty good bottom to bounce off of, and we will be getting oversold without that much more of a break. Next, natural gas has broken out of a head and shoulder top formation. I'm sorry, it's my most favorite formation. I see them a lot. I know what to look for, what to expect, et cetera, et cetera, et cetera. They are a little on the complicated side sometimes. Sometimes they're real straightforward and simple. But they have a variety of features to them. There's symmetrical, there's cycles involved, there's symmetry, there's breakouts, there's retracements, there's reversals or overbought or oversold, depending on top or bottom. Conditions that evolve typically in the formations. Gosh, there's a bunch more also. So yesterday, all of the day was spent under the neckline for the first time. That's the breakout day yesterday. Now you take the measurement of the highest high of the head and you go straight down to the neckline, wherever that is. And I just took that little yellow line, and that's the depth of the formation. You start that depth measurement on the breakout day from the neckline down, and it gives us a minimum downside objective of 2.4-ish. Close to a support area, probably should drag this to the right. And a trend line, old trend line. So, oh yeah, an old trend line. So that's an interesting combination. It's not big. It's only a month in duration, not a bottom, it's a top. And it's acted just right yesterday. Perfect. But we're not oversold yet. So I could easily see a move in the next few days pretty directly. A move down to probably 2.8 to test a little support. Bearish. Natural gas. Next. Gold. Gapped up. Now that's a legitimate gap today. But we're not oversold today. We were overbought. I meant overbought. Oh, we were overbought only 2 days ago. 3 days ago. We are very close to making new highs for the trend. That is the potential for a double top. We do have an upside gap today. Is this an exhaustion gap? Will it end up being an island top if it gaps down tomorrow? It is closing at the moment, or is close to the low of the day. And if it drops a lot more, we'll close the gap today. But if it stays here and gaps down tomorrow, maybe it'll turn into an island top. This could be a turning point. I'm looking to turn bearish here, frankly, at least down to this previous top of the pennant formation. I'll make it look a little more obvious to a lot of people. I'll just drag that to the right slightly so that you can see it's going to come to a point somewhere over here. So test the top of the formation, okay. Minimum downside retracement I'm expecting, I think, pretty quickly now. This could get a lot more serious if it kept on dropping, like the stock indexes, by the way, and end up with a double top formation, a downside breakout. And I'll draw you the probably in the next couple of days, the downside objective based on the pennant in reverse. Next chart. Silver did try to make a new high again, is not staying above the trend line. It has stopped at for the last week and a half. Today it did not stop at the line. It made it through the line, but it couldn't make any new highs for the last week or two. It just stopped at where it stopped before. And now trading around the middle of the range, but below the line, looks like it's kind of failing here. And if gold goes down like I think it just might, silver could follow. And getting back down into the support area. Now, there's a fine-tuned comb here. I mean, we're close to either a significant upside breakout if there's this rally all of a sudden, or it is starting to fail. Next, platinum. It's between a rock and a rock. We're not making any new highs. It's going to be a new high close. But then you got a variety of resistance levels just above the market, stair-stepping its way up. And it's topped out in this yellow resistance area or a little above so many times since September a year and a half ago or something. And there's a huge area of support also below. So will it have a little more of a pop rally for a week or two? That's quite plausible. It could come up to say 1030-ish. If so, we've started it because we have a new high close. We just have to get above the high of a couple of days ago, and then obviously above 1,000. Otherwise, it could just mush back down here a little bit, zigzagging its way, and nothing great into support again next. High-grade copper made a new low since our sell signal on the top of the market. Now, the original trade with the original code, no changes in the speed at which the copper STS smart trailing stop moved, got us out with a profit a few days ago. Don't cry over spilt milk. If we had gone a lot slower down, we would have risked taking a losing trade because that rally high was all the way back up to where we got short to begin with. So at that moment during that day, for a little while, you were turning a loser to a profitable trade way down here the previous day to a loss. Not usually a smart thing to do. This one simply turned around and did come back, and here we are. Today, we have an outside up day. We're not oversold. We're not going to get a buy signal with the ER signals. We do have a bullish engulfing, which does imply it's going to rally some. And remember, this is copper. It really has nothing to do with gold, silver, or platinum. So I have to think we're going to rally a little for copper because of the bullish engulfing today. Period. Next. Beans. I've been trying to justify a long-term bottom in grains off and on for many months, probably well over half a year. Today we're rallying nicely, up 11.5 at the moment. I want to see it close above 1076, and then that's almost assuredly going to be on the same day, making it close above 1081, another nickel or so, and be a major upside breakout off of a double bottom formation, which produces an upside minimum objective, if it works correctly, at 1186. But that's what's got to happen here. You got to get above 1081 first, and then you got another 100 higher to go. That's a pretty sizable move. So coming up significantly today, at the moment 11.5 is good, not great, but good. And I couldn't tell the last couple of days whether we're going to dribble off some more first and then come up or just start to come up. But you know that I've basically been bullish. It's a matter of, fine tuning these things, and sometimes they're not so easy to come to a conclusion with. So I'm liking this, bullish. I think we're going to go higher. If you close all of a sudden below 1039, well, those comments are off and we're going to sink again a little. But I don't know that it's much. Next, soybean oil. Sideways on a closing basis for looks like about 5 days in a row. Can't seem to get its rear end in gear. Nothing. Today's a doji and we're down just a little bit. I'm hoping it's going to start to move its way up. I don't see any evidence of that. It's just gotten stuck. Support below the market. Variety should hold. I'm looking for a large bottom formation. I won't go into the details much more than that at the moment. We've got plenty of time to talk about details later. Next, soybean meal. Major historical support, possible triple bottom formation. Got a nice rally today. Very good. I'm liking that. Small gap to close now, slightly higher instead of, significantly. So it bounced off support, never got oversold. Yeah, good. If it does start to close above 322, let's call it, then you've got yourself something going. I'd be looking for this trend line to be tested, broken, highs to be tested for the last year. And then if that's broken, holy moly, we got a big move coming. Maybe, probable. Let's hope. Next, corn has already fulfilled my minimum upside objective, and that was back on January 23rd, last week. This head and shoulder bottom worked great. There was a false breakout for a day and a half or so. Then we had a legitimate one. That's where the measurement comes from, the day it starts closing above the neckline. We got there almost exactly 4 days ago, 5 days ago. Now we're at new high ground. I keep telling you, minimum upside objectives are minimum. They can go further than they're supposed to. This is now doing that. How much higher can it go? Well, next significant resistance, 513. That's only about 20 cents away anyway. Okay, we're going up. We're not overbought at the moment. Got to keep your eyes open. We're fairly close to it, and we were recently overbought. So best I can come up with right now is, around 5, 10, 12, 13 maybe. Next. Oh, good. Wheat. Real strong rally today from a follow through from yesterday's close. And now the double bottom is looking a lot more interesting. We may have a new high closing price since the middle of December. That's 6 weeks. That's good, not great, but I want to close above 566.75, and we're 61.75 ASAP. If that happens, then we're probably on the same day going to be closing above 569.25, which is the high on December 11th. That's going to be somewhat of a breakout to the upside off of this low trading range, which is the second low on a broader double bottom formation, which is probably going to be enough of a goose, buy stops, upside momentum, intermediate moving averages, a whole bunch of indicators started to turn intermediate to longer term bullish more convincingly, et cetera, et cetera, et cetera, and keep the momentum going. Yep, I'm liking this. Well, it's got a little ways to go, but bullish. Here's a problem with the soy cattle. It has gotten so overbought, it's ridiculous. Once I get up into the high 80s, I've been saying 90, and I'll stay with 90. This is close at 88. I start screaming bloody murder, the damn thing's going to top out. And we did that yesterday, and I think I basically said the same thing. We didn't make a higher high today, but we came super close. It is a doji, an inside day, but we're down a sizable chunk. So it can't have an outside trading range because it didn't get higher than yesterday's high. Close is good, but, no cigar. So I think it's starting. I think the top was yesterday's high, and today's super close to it. I'm looking for a move down to probably 196 minimum and probably 191. Next, hogs. Whoops, hogs. Minor new high. Going up a little bit more probably. And it is now doing some serious damage to the previous head and shoulder top, which broke out to the downside on December 30th, came down, got in an oversold condition of support area, got halfway down to its minimum downside objective of 8160-ish, came back to the neckline. All of this is classic so far. Turned around and almost made a new low on January 22nd. But the rally we have just had in the last 6 days has been too much. It not only tested for the second time, as I said yesterday, very unusual, not particularly likely, and it had better start going down immediately. It didn't. It's now at and above and staying there at the old neckline of what now seems to be a dead head and shoulder top. We're not going to get down to my minimum downside objective of 8167-ish anymore, because now after the close today, probably before tomorrow's YouTube, I'm going to erase the downside objective, the neckline, the arch marks on the shoulders, and it's not good anymore. That's all there is to it. Next, the only stock I've been watching now for about 2 months plus is coming around okay, just like I was hoping. So it has broken out of a 2-year bottom, tested major historical support, rallied back up, and today making a new high for about 3 weeks, it looks like, breaking a minor bear trend line, which has 5 points on it, which means the line's pretty legit. And when it's broken, which looks like it's going to be today, go up a little bit more before the close, will you? That'd be a little bit nicer. It's sitting right on or hair above. I'd like a little more rally, not to close below, and sure as heck not to close a lot lower. So I'm liking what I'm seeing in general. I think it's going to continue to rally up some more and maybe get up pretty soon above 93.90. And that should cause it to be on its way even larger. Now, this was a head and shoulder top also. The shoulder I don't have marked here, but that's the time frame. That was overbought on 11/21/24, 11/22, sorry. Dipped down, came back up to new highs, got overbought again, dipped down, came up to a minor rally high, and that's the last shoulder. Dipped down in the new low ground, broke the neck. Oh, I'm sorry. I was off in my timing here a little bit. Sorry. The last shoulder high was December 18th. And that was really good timing because of the number of days or bars from the first shoulder to the head and from the head to the last shoulder is oftentimes very symmetrical. And this one was broke the neckline in the same day as the shoulder high. That's a little unusual. And had a huge downside breakout that day. Then we came back toward the neckline on our rally high of January 6th and made new lows after that, finally reaching and surpassing the minimum downside objective, which was 82.99, call it 83. And that was again on January 10th when we got to our objective. So the head and shoulder worked a little bit lower the next day at support, turned around, almost oversold, almost. And now we're starting to make a second time new rally highs. I like it. What is the E-mini doing? Whoa. Okay. Let's take a look at the 1 minute. We jabbed into new lows while I was yakking away here. Bounce back. I still think it could make new lows again before the end of the day. And what did I say? We needed to be down around 7 points in order to get a real big reversal out of it. Getting down below 2023. Yep. That would cause a bearish engulfing ER sell signal turning it red. And that would be great as far as I'm concerned. You guys have a great day and profitable trading to you.